Hello, it's Sunday, June the 27th, 2010, and I'm Martin Smith with the weekly outlook from UFXBank. Now, this Friday saw the dollar index's lowest daily close in 6 weeks. The level of overall investor sentiment and the strength of the US dollar's own fundamental backdrop will influence the greenback, as both of these subjects are facing dramatic changes with a scheduled G20 meeting, deteriorating financial conditions in already unstable economies, and the prominent risk of a negative non-farm payroll reading on Friday. Now, while risk appetite level, the relative economic health and level of yields behind the greenback are in flux, the currency's status as a safe haven can easily overwhelm most other concerns that develop along the way. But for all the impact that news from Europe or China can have on risk appetite, we predict that it will be news from within the US, like the June unemployment data due for release on Friday, that will have a far greater impact on the US dollar. Down under, the direction of the Australian dollar continues to be dictated by the level of risk appetite. Any overwhelming surge or dramatic slump in risk appetite will return the Australian dollar to its position as a high-yield currency when paired against currencies like the US dollar or Japanese yen, both considered safe haven currencies. So this week, risk appetite trends will mightily affect the Australian dollar, and a general shift towards safety and demand for liquidity will draw foreign capital that was invested in high-return Australian assets back into cash. Over to Europe now and the euro. Last week saw the euro finish almost unchanged against the US dollar, but a late Friday bounce left short-term momentum in favour of further euro-dollar recovery. Also, China's announcement that it will allow its currency to fluctuate against the US dollar instantly sent the euro higher before Sunday's opening. Now, in theory, various economic data releases should have produced euro strength, but in reality, the movements in the S&P and other key asset classes continue to be the most important price movers for the euro-dollar pair. So there's quite a busy week of European economic event risk ahead, and the US non-farm payrolls report and a number of important European data releases, such as German unemployment change, should dominate euro-dollar price action. Finally, the British pound. Now, this rallied against the US dollar last week, and traders are sure to keep a close eye on further technical developments as the markets digest the recent fundamentals in Great Britain. Last week, the new Chancellor of the Exchequer, George Osborne, released his budget statement, which is aimed to restore fiscal surplus by 2015. Though there was a desperate need for the recent emergency budget, the plan's extreme measures places the UK at risk for a double-dip recession for the second half of the year. Well, that's it from me. Be sure to visit us at ufxbank.com for simple, safe, secure trading.